Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to the Friday Fix. I don't think we did one last week, so I think was I going to Vegas last week at this time? I think I was. Or maybe I was in Vegas, I can't even remember. You joined me and the marvellous guys from AlphaPicks. Sorry, Alex is WhatsApping me whilst he's on the call. It's all confusing. I can't do two things at once. Anyway, the marvellous guys from AlphaPicks. Do subscribe to their Substack, follow them on Twitter, etc., where we usually, as usual, go through what's gone on this week in the markets, the major themes, etc., how they're impacting markets and what we're looking for going forward. But before we do, I'll get the legals out of the way. Nothing discussed on the podcast is trading or investment advice or infers any kind of endorsement by PiQ, AlphaPicks, myself, Ryan Paisley, Alex or Jesse. Speaking of which, guys, how are you?
Very well. It felt very surreal actually to be at the Stafford last Friday, to walk in and Jesse was sat in your seat at your table. So yeah, it's good to be back.
To be honest, I did have the staff WhatsApping me saying, "Where are you? Your friends are here." And I'm like, and at the time I was 3 sheets, well, I was probably about 20 sheets to the wind, to be honest. At that point, when they messaged me, yeah, I think I swore at someone. Yeah, I don't know, but yeah, I'm glad you enjoyed it. I'm glad I can add this bit of culture to your lives.
Exactly.
We had a good time.
And guess where I am sat right now?
In that seat.
Oh, yeah, absolutely, of course.
Yeah, absolutely. Yeah.
I've got, when I'm sat here, I've got a little booster seat there as well, so I can actually see above the table. But apart from that,
and actually, Ryan, I thought we'd kick off.
Because I'm so short. What?
We'd kick off the seat. You're just back from America from what we can call a business trip, I think.
Let's go with that.
The view on the floor of US and China and in general the health of the US economy, our consumer spending, all that jazz. What was your take? I'm talking like inflation, prices.
Yeah, well, to be honest, that was the hot topic whilst I was walking around the casino. It was all about, I was asking people what their thoughts are on inflation and tariffs and stuff. That's all I could talk about, really.
Yeah.
But jokes aside, I didn't leave the casino, so it looked busy enough to me.
Fine. Okay, good.
I tell a lie. We did go. Well, so yeah, we got taken to the Raiders game, which is good. That was really busy. So if that says anything,
yeah.
I tell you what, that's another level as well. Staying in a box and watching a Raiders game. Also, I went we played on Tiger Woods designed crazy mini golf. Which again, that was really busy. If that's any indication about US markets.
Fine. Yeah, good to know. Good to know. The consumer is alive and strong.
Well, they were around too, exactly.
Yeah. But yeah, I'd say that's probably one of the main stories because, literally this time last week when I went to see Jesse at Stafford, everything was sort of going along fairly fine at the end of a fairly quiet week. And then all of a sudden we had a pretty sizable sell-off this time last week, 2 to 3% across S&P and NASDAQ. That was walked back as we basically started this week by our friend President Trump, who put it on his Truth Social post, very much that it felt like, oh no, I've kind of overstepped the mark here on Friday with all my crypto bros being liquidated, etc., etc. And he puts out things saying, don't worry, guys, everything's chill. Now, over the course of this week, I think it is clear to say that the markets haven't quite bought that as much as he maybe thought they would have. There's been other stories, obviously, with like tit for tat port fees going through and a few other bits and bobs. And, certainly when you look at the price action today in obviously European equities and with the futures, where the NASDAQ's basically down 1% again on the futures markets, could we be in for another sort of Red Friday? And is this time around anything different to maybe a slightly bigger sell-off? I'll throw the floor open. Interested your thoughts on.
Go on, Jesse. After you.
So, I think the interesting thing about the Friday sell-off and then the backtracking over the weekend was in Q1 and early Q2, it was a bear market in equities and it was a big bond sell-off that really got Besant and Trump's attention. Whereas this time, Friday, bonds were the safe haven, which they haven't been for a lot of the year. So bonds were bid and equities were down 3%, and they already step in to kind of calm things, which I thought was an interesting turn. As the year's gone on, they've stepped in sooner and sooner on these market sell-offs. Then, what was the other point you used?
Just saying, from here, do you feel it's? I know obviously we put a note about it on Sunday, but whether you feel it's the start of a broader sort of trade war to finish off the year. I mean, Trump actually said on Tuesday, I think it was, that we are in a trade war with China, or if you feel like this is again a kind of reciprocal April situation, that basically gets bored again.
No, yes, sorry. The other point that it comes to mind when you were saying was about the Friday. Do we get a sell off again? I do think we'll maybe fall back into that habit where Fridays everyone goes risk off just because we've got 48, 60 hours where markets are closed and who knows what Trump or Xi or anyone could do. Which for the past 3-4 months, markets have been in cruise mode. No one was reducing risk over the weekend, but I do think we might see that come back for the rest of the month.
Yeah, I like your point there. But just, so my view on all this is, one, I don't think we are deep into a trade war. Also, one thing I've, with my tinfoil hat on, I'm a bit skeptical if Trump did this by mistake, or, whether or not people are true or kind of hitting the nail on the head when they say potentially Trump-related entities are short selling or getting some options on, getting some puts in, and then he's doing tweets like this, then we spank off, and then they buy him back. Look, let's be honest, you wouldn't put it past him and Barron, etc. Fair play to them if they are doing that. But the way it's walked back it feels like, he kind of, the way it was walked back was a bit too easy for me, which made me think it was all a bit like, it felt a bit like all orchestrated. It felt like very theatrical. Again, I don't think things are much worse than what they have been previously. I just think there's just been some heated text messages going back and forwards, and that's all it's been. There's been no actual policy made. There's been no tariffs going up or anything like that. It's all been basically politics and market moves based on the fact of a few tweets and a few replies back from lower level Chinese Politburo members. What do we do on Fridays now going forward? I can understand what Jesse's saying about maybe now, especially year end, people will want to be starting, again, it feels a bit shitty to be talking about year end on October the 17th, but there we go. But people are going to start wanting to, if you've had a good year, do you really want to run risk over the weekend and risk blowing your P&L up, blowing your return up? As we go, I think as we get closer to year end, we're going to see more risk being taken off on Fridays and maybe not put back on as much on Monday. So we could get, we could, in theory, see a proper liquidity drain out of equities, a lot sooner than we normally get for Christmas markets. Obviously, anyone not aware, Christmas markets are terrible. Do not trade during Christmas markets. There's no liquidity, especially ahead of New Year funding and stuff like that. I think we could be in for a very kind of volatile last, month or so, couple of months. But that's because positioning has been withdrawn from the market. And obviously when liquidity drops out, we just get more volatility, because you've got less orders to soak it up. This would be an interesting one to watch, but TLDR, I don't think things are in a pickle trade war wise. I don't think we're any really worse off than what we had been over the last 3-4 months.
Yeah, I mean, I think one factor that I thought was quite interesting, obviously the move in bonds, I think definitely was one flagging. The other one is that you have seen the VIX materially spike since basically last Friday when it started to jump, and over the course of this week it's tracked higher. So it's now I think it's about the 28 handle, which is higher since the situation back in April. So I think from that that's definitely a sort of slightly interesting move that you can see the jump from Friday hasn't eased off, and it gives that impression that people are over the course of this week still nervous about where we go from here. And the other one is obviously the move in precious metals, which I think is a great segue in the obviously gold and silver, palladium as well. And you look across those and really, and we've spoken about them before, but they just really doesn't seem to be any signs of stopping. Now, first little stat attack, because I did a piece on silver in the week. Do you know the size of the silver market relative to the gold market in terms of proportion? So is it,
when you're saying proportion, you want about lots traded, or you want about no
value? So is in
go on now. Give me
I know, yeah. So I'm talking about total tradable notional on an average day. So let's say gold trades 100 at an index level. Right. What does silver trade? Is it 1 to 100 ratio, 1 to 10, whatever?
I'm not entirely sure what this metric is we're talking about. So I'm not. Right, I'm going. Can I be? I think I've got a funny feeling because I'm thinking back in the during the floor when there was a lot of silver ETFs used to be banged around far more than gold. So I'm thinking potentially there's more silver traded than gold, which would probably surprise people. But that's as far as I'm going.
Okay. Jay?
Jesse, Jesse, if you can
well-
work out what Alex is getting at, fair play to you.
I am equally as confused as Ryan, and neither have the commodities trading floor experience. So,
Fine. So the gold market size is 9 times the size of the silver.
So I was completely wrong. Then.
No, you're right. But what that
I blame the
means,
question.
I didn't actually realize that the silver market was that smaller in comparison to gold. But obviously, when you think about it, in terms of like in the gold market, you've got like central bank activity. You've got a lot more ways of getting access.
Do you know what I think I've been getting confused by on that question? Well, I got confused by not on that question,
Everything.
to be honest. But I think what I was thinking of is I remember that stat that used to go around ages ago, which was the ratio of paper silver to physical silver. And apparently there's so much more, if you try to convert all the ETFs into physical, like it was something stupidly high number of paper that should then feed into physical, but there just isn't enough physical if the paper all kind of decided to settle at once.
Yeah,
that's what I was getting at.
Yeah, for sure.
No, I'm still hungover and jet lag from Vegas.
But so when you look at silver, I mean, I basically had 4 reasons why I think silver still trades higher from here in coming months, and one is that you've got that industrial demand, like solid industrial demand that's always going to be there.
Is that genuinely though? Like, I know what you're saying about like industrial demand, but is there really that much? And also, is that anything to do with this rally at the moment? I don't think it is. I think this feels really just like, just a squeeze on people rushing for the door to get their hands on physical. And there is that rush, there is that kind of supply issue, and also, who knows? We've seen it in the past with nat gas. We've seen it with other commodities where, there's so many options are being bought out the money that then become closer to in the money, and then that kind of causes some forced hedging and stuff like where people are being forced to buy futures, and then it kind of spirals that way. I think there seems to be a combination of things on the market dynamics front, which seems to be powering the move more than anything else. I don't, has the demand for silver from a industrial standpoint, has that increased over the last 5 years? I have no idea.
Well, let me hit you with this one.
Go on, this is it. Right, go on.
It's a great word. It's my word of the day. Let me get it right. Photovoltaic demand.
Easy for you to say, son.
Photovoltaic demand, which is basically like solar panels.
Right. Say solar panels then.
That sounds smarter. Photovoltaic demand, which relies on silver, that has tripled in the past 5 years. And so obviously I think we're going to see more EV, and like associated renewable energy, funky solar, whatever you want to call it. And all of that demand is
I like it when you get technical.
Photovoltaic. Sounds like a volcano. We're going to photovoltaic.
You do realise I'm changing my phone now to photovoltaic.
But then I agree with what you said on that. We saw it this week with that short squeeze that we had on silver, where basically like you had that divergence between London prices and New York, and obviously the problem that caused. And then the other one, which is a story that's been picking up more focus, I think we're hearing more on in coming months/year, is the debasement trade, which is this whole thing of like people are going into silver, gold, crypto, and basically, it's part of this de-dollarization, but just in general moving away from, your more traditional currencies into commodities / digital assets. And if that continues, then silver will be a beneficiary of that.
So will any other precious, like would you look at platinum or palladium? Any of those?
Yeah, I mean, here's one that I don't know is what like the platinum or palladium market size is relative to like silver or gold. I would say they're smaller.
Yeah, much smaller. Much smaller.
So I suppose that's probably the only thing that would prevent it.
Yeah, because we did have this whole big push into EVs, etc. And it was going to be the death of the combustion engine. Therefore, I know obviously platinum used in what they called.
It's in the converters, isn't it?
Yeah, that's it. That's the one. So there was like they were saying that the demand for the converters is going to drop out, But obviously now we've seen a lot of this EV push is being reversed, and we're seeing especially like US car manufacturers ditching plans for these wave of new EV models and going back to the ICE internal combustion engine cars. So maybe we see that pick up for the catalytic converters on the platinum side. I don't know. Also, as with the metals complex, one does drag everything else with it.
Yeah, for sure. Yeah. But and yeah, it drags it with it to the sense of, even if we put silver to one side and turn more to gold, again, like it's hard to, and this is something we specifically spoke about before with gold, where it's like in pretty much every scenario you look at from here, it's a buy gold situation. Even in the past week, it's been like, oh, US China escalation's back, we buy gold. Oh, no, actually things are okay. The Fed are going to start to ease faster than expected. Well, there's a lower opportunity cost to hold gold, buy gold. So it's like, it also just feels that pretty much any scenario you can look at going forward is a gold positive one.
Yeah, no, I see what you're saying. It's hard to disagree. I think even Jamie Dimon, who hates owning gold, is saying for the first time in a long time he can make a case for it. I think he was suggesting he still didn't like it. Yeah, I think he was saying it costs you 4% to own gold. But you're right. It feels like whatever happens, it seems you can make an argument to buy gold.
Yeah, and lovely Sedgwick again. Thank you very much to Jamie Dimon.
My pleasure.
He was talking about cockroaches this week.
He's really stirred things up in.
Yeah, apparently where you find one cockroach, you normally find many more. Apparently, I'm assuming he was talking about bad regional banks. I'm guessing now.
Yeah, I mean, can we also just go on, Jay?
I was just going to say it felt like a bit of a shot at the other banks, basically to say, if we've got one, you've got some too.
Yeah.
And also this expression that if there's one cockroach, there's more. I'll be honest, I've never heard. Have you heard of that expression before? I've never heard of that.
No, but to be fair, he's right. But no, have I heard it before? No, never.
Yeah. I mean, if people were banding it around, being like, it was just like a commonplace expression. I was like, I've never heard that if there's one cockroach, there's more. But
well, look, I
Jesse,
tweeted it. That's how much I liked it.
Oh, I don't know.
You never heard of it? No, I've never heard of it. But yeah, and so I don't know what your thoughts are. I mean, I think also
it's cockroaches.
Yeah. Have you spotted more than one? Regional banks. Because we don't really have it in the same way over here in the UK as they do in America. Where
we don't have it at all, do we? We don't have I mean, we don't have the South End Bank.
Yeah, I mean, I guess you've got some just UK domestic.
Oh yeah, but at least that's a country.
Yeah, true. Yorkshire Building Society, does that count? Yeah, but obviously in the States, they've got, I don't know what it is, 50, 60, 70 different regional banks. And yeah, the concern is that obviously a lot of them maybe have been too lenient on some of their credit terms. They haven't done enough due diligence, blah, 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 blah. Do we feel this is a story that warrants more serious attention, or do we feel like this is a...
My view is this kind of, as me and Michael Brown were talking about this morning, actually, I think, was it Zion Bank? What they're in the hole for is $50 million, which is fuck all these days. I just feel like I get the impression that there's been a few rumours going around about the regional banks got some issues. These issues aren't that large, but because it's regional bank issues, everyone's remembered, what was it, April 2023, or whenever it was?
SVB.
Yeah, and everyone's gone, oh shit, the bed. And then we've seen the whole sector be slammed off. And then, of course, you get the usual talking heads. We all know what I'm talking about on there, on Twitter. There are now all of a sudden experts in regional banks saying that this is the end of the world. I don't think that's the case at all. As Michael Brown said this morning, I don't think you can feed what happened on the regional banks really meaningfully into why we've sold off today and overnight. Like Chinese tech sectors were down 3% across the board. That's nothing to do with regional banks in the US. I think it's more a case of what Jesse was saying earlier on about taking off risk ahead of the weekend, because you have no idea what could be said. I'd be shocked if we are talking about regional banks in 2 weeks' time, put it that way.
Jesse, thoughts?
Yeah, kind of a similar thing, that I think it's probably not going to develop into a huge story, but just markets being slightly jittery. And then if you have this sector of regional banks with kind of a potential, is this, are these few concerns it, or is there more, people are just going to fly into other areas of the market which are slightly safer? So I think the sell-off is linked to the story, but probably exaggerated by just the past week of market action that people are slightly more risk off, let's say.
Yeah. Yeah, fine. And then probably one of the last major stories I want to talk about was we had a lot of Fed speakers this week, which ironically didn't get as much coverage as I thought it would. But there was, well, I say interesting notes. I mean, it was basically...
Is this you realising there wasn't that interesting? You seem a bit of a nerd.
Yeah, well, I mean, it was more about this time last week. This time 2 weeks ago, because Ryan was in a casino at this time last week with the sunglasses on.
Or in a strip. Well, what? Yes, I
was somewhere else. Let's go into details. And 2 weeks ago, we were basically here and we said, okay, the government's just shut down. Fed pricing for end of October is basically nailed on for 25 bips. Is that rational? Yes, no, where do we go? And you and Jesse actually both said that you thought they would still cut if the shutdown kept going until then. I took the other side of that. And look, I mean, Powell and the other guys have come out and pretty much have nailed on the fact that they will cut at the end of this month, irrespective of if the government's still shut down.
So as you brought that up, does that mean because we were right on that and you were wrong, does this wipe out my 7,000 by November 21st for a big old... just asking.
It's just a netting trade. I mean, look, are you off now with your 7,000?
No. I'm a man of my word. Unfortunately, it's going to be costly. But just to clarify, this is only like Jesse can join us, but I'm not also buying Jesse's.
No, I think it's me and you buying Alex.
Oh, okay, even better. It's a bit of happy days.
It's all right. We can do that. There's multiple counterparty risk on this trade. And so, Powell was basically pretty chill. He was kind of, he's basically done on that front. Interesting, actually, that more of his focus, and obviously, on this one, no guesses for saying who thought they should cut by 50 basis points in October.
My mate Mirren.
Yeah, your mate Mirren, who's just like...
You be careful what you say, okay? Because we'll fall out, because he's a top fella.
He's just that one guy in the back. Can you imagine when they all sit down for their meeting? And
it's
he's
a
just
big bird. It's a big
up.
bird meme, isn't it?
Yeah, he's
big around the board table, and he's turned up with his like crayons and his like little maze that he gets when you order when everyone else is reading from the big boy menu, and he's just got the crayons and the maze sitting in the corner.
Yeah. And he puts his hand up and say, I think we should cut by 50.
Yeah, just one word. Just 50.
Just one word. 50 bips for me. Thanks, chaps. Nothing else to say. It's like the weakest link. You know the weakest link when they flip their cards over? Who you vote on? 50. But he was on that. And then Waller and a few others kind of confirmed the narrative from Powell. The other then interesting I spotted from it was the runoff of the balance sheet is coming back into focus, because there is the thinking, which I kind of agree with, that they're probably going to hint, if not explicitly, and say that come January or maybe March, they're going to finish off QT, because the size of the balance sheet now, or in a couple of months, will be back at where it was pre-pandemic. And so logically, it's like, do you want to keep draining liquidity out of the system beyond, what you did from the pandemic? So I think that is something to keep an eye on. I mean, I think we'll leave it to our mutual friend Conks to give us the plumbing implications.
Yeah.
But I think from a sort of high level point of view, that's something to watch out for. And really, I think would be a pretty smart move if they did do it there.
No, absolutely. I agree with you. Leave it to Conks. Just a question for you then. We've again, trying to pin you to the wall here. Ooh.
Calm down.
So sorry. Still not got. I still haven't got all of Vegas out of me. God. Right, moving on. But in terms of market, what we're thinking now, are you thinking grind like sideways with volatility up and down? Are you thinking kind of maybe trending off towards the end of the year, or do you think this is maybe a small blip that might last a week or two, but then towards the end of the year we get that grind higher again? What are your thoughts, Alex?
Yeah. And we're talking like S&P.
Yes, yeah. But there's only one. We're not talking about the fucking Dow, are we?
I don't know. Talking about the CAC
Russell 2000.
I would say, I think personally, I'm actually going to go out on a limb here. I do think we'll be trading in a range from here through to the end of the year, but I don't rule out one more fresh all-time high until the end of the year. So I think, we could be looking at like 6,800 as kind of a top for the year, and then trading in, let's say a 400-point range, which I know is probably quite generous.
Well, no,
but
I think that's a fair range, to be honest. But what we're seeing over the course of the next couple of months, no, I like that. So kind of sideways-ish, but maybe an upward skew.
But I do. But annoyingly, I mean, because we're in it as well. But I feel like it's going to make it very tricky to generate returns for the last couple of months of the year, because I feel there's going to be lots of like times where you'll see a sharp burst lower, and you might look to cut positions, buy puts, whatever.
And that ties in with and that ties in what we said earlier, right? It's like, if you have got a big book and you've had a very good year, why are you going to be risking it for the last month or so?
Exactly.
Jesse, what are your thoughts?
Yeah, I would say, I put this out on Twitter yesterday, but Choptober.
Oh, I love it. Did you make that up?
Yeah, so I did going into the month, everyone was coining the Uptober and October. So I was like, we got none. We got Choptober instead.
I love it. Trademark. Yeah. Done.
Yeah. Yeah, I think kind of October sideways, and then I'd say a rally into year end. Probably not the size and scale of the move that we've seen in the middle of the year, but yeah, probably ending November, December, we'll get to highs. But then,
7,
like you say about 7,000 before November, 21?
Yeah, 21. Thanks for remembering my birthday.
Yeah. And then, like you say, Christmas markets, maybe just ignore those last 2 weeks.
Exactly.
I'll take those off anyway.
Yeah, exactly. Well, I won't be here, I'll be honest. No, I appreciate that. At least no one's looking all doom and gloom.
No.
Coppers are going past quick. Run.
Oh, he's run away.
Yeah.
I'm joking. I'm joking. The coppers aren't really after me.
And on that note, bombshell.
well, yeah. On that note, guys, honestly, I think this has been a really, really good chat. I have missed you all. Was there anything else, Alex, or is that it?
No, it's all from me. Yeah.
Perfect. In that case, I'm going to go back and might order myself a non-alcoholic beverage.
Yeah.
But guys,
doing the same thing.
Thank you. Oh, stop it. Guys, thank you so much as always. Listeners, again, I can't stress this enough. If you don't subscribe to AlphaPicks Substack, go give your head a wobble, because the content and the quality of the content they put out is phenomenal, and a lot of it is free as well. So get involved. But guys, thank you so much. Listeners, thank you so much. Whatever you're doing this weekend, have a fantastic one, and we'll see you all next week. Much love.
Thanks.